The Reserve Bank meets today and many economists believe it will deliver another interest rate cut with more to come. But right now, very few seem to think that rate cuts alone are enough to restore confidence here in Australia. Neil Woolrich reports.
The markets are already talking about some hefty interest rate cuts, but is anyone listening?
People are very, very nervous, and there's no doubt that a rate cut will be helpful, but it's not going to be the only thing. You know, the Reserve Bank, I think, have moved too little, too late. Confidence is already at very, very low levels, having been shot to pieces by the extended wait for action.
I think the structural deleveraging that we're seeing across the economy is more likely to overwhelm any cyclical pickup in credit that you see from rate cuts.
The US economy is staggering, China's growth is slowing, and the European debt crisis appears to be getting worse. Little wonder that here in Australia, consumers and businesses remain reluctant to borrow despite the recent interest rate cuts. Total credit growth remains about 6%, not much more than the combined growth rates of GDP and inflation.
So I wouldn't expect that another round of rate cuts would move that number from 6 to say 10 or 15%. That's what we saw a decade ago. Then numbers we're unlikely to revisit for a long period of time. I just think that the rate cuts will keep credit demand where it's currently at.
Stephen Sunderland runs Quest Carpets, a manufacturer in Melbourne's outer suburbs. About 70% of his business comes from people changing houses, but the auction market has failed to fire this year.
Since Christmas, we've really seen it flatlining. We've seen no real improvement. There's pockets of growth, but overall the market is as flat as I can remember it.
And his other source of revenue, new home building, hasn't been much better.
The new home start figures recently were very poor. That won't sort of hit us for another 7 or 8 months because that's the length of the time for a house to be built. But we'll need to see something. I just can't see where any lead's coming from at the moment.
Then there's the question of how much of the Reserve Bank's interest rate cuts the Big Four lenders will deliver. George Gabriel says the key will be to see what NAB does. It's been the price leader for 2 or 3 years among the Big Four. But last month, NAB moved early and only passed on 32 basis points of the RBA's 0.5% cut, paving the way for its rivals to also hold back.
I do think there's probably another round of out-of-cycle rate rises which could and should reasonably be worked through. I think if you look at the latest set of financial results, the Australian net interest margin, banking net interest margin, came under some quite considerable pressure.
Ord Minnett equities analyst Rodney Brott says interest rate cuts will help, but at the moment markets are trading more on headlines than fundamentals.
The markets at the moment are pricing in some pretty scary scenarios. Whether or not those will unfold is pretty much in the hands of a bunch of regulators and central bankers in faraway places.
And trying to predict their actions has so far proved to be a difficult and costly exercise.
And of course, there'll be full coverage of whatever the RBA decides at 2:30 Australian Eastern Time this afternoon, and analysis of any further rate cuts planned.